Hi and welcome to the presentation of Terranor's Q2 report. My name is Mark Sandberg. I'm an analyst here at DNB Carnegie. I got with me Mikael Berglin and Inka Konturri, who is CEO and CFO at Terranor. A warm welcome. I will let you present, and then I'll come back at the end with some Q&A. So with that, I leave the word to you.
Thank you, Marcus. Thank you for having us, and thank you all for listening in to this interim report for Terranor for the second quarter. Of course, starting the presentation goes without saying that this marks a new era for Terranor since we successfully listed the company at the Nasdaq First North in June. Very excited about that. Was an intense process, but here we are, Inka. Looking at the operations for the first and second quarter, of course, we are very happy to say that we are in line with expectations. We're actually above expectations. We will tell you more about it, but I think in a nutshell, that is the company presentation today. Presenting today is, like Marcus said, my name is Mikael Berglin. I'm the CEO of the company. CFO Inka Konturri will help me today. And when we're not here presenting, of course, we are supported by a very experienced staff. We just highlighted the country managers, Per and Pasi and Ivan, as part of the top management in the company. Well, looking at Terranor and the performance in the second quarter, like you know, Terranor, we are solely specialized in road operations and maintenance. That is what we are doing. The predominant customer is state and municipalities. Some 90% of the revenue is generated from state and municipalities. We operate in 3 countries, whereof Sweden is, of course, the lion part. Some 60%, close enough, is generated from Sweden. Looking at key figures in the second quarter, Inka will give you more details behind this as we proceed in the presentation. But revenues are up, and more important perhaps, also adjusted EBITDA. So the underlying performance of the company is progressing in the right way. We will tell you some about seasonality in our line of business, but I can already now say that for quarter 2, this is a strong quarter, but we also expect quarter 3 and quarter 4 to be even stronger. That is the trend of our operations and our business. Looking at the business that we operate in, road operations and maintenance, we expect or assume the overall market to be somewhere close to 80 billion Swedish in the 3 countries that we operate within. Of course, big drivers in this market is naturally keeping roads open and safe, and everything that society depends on for us doing that. So we proud ourselves of contributing an important to society service. Then again, on top of that, of course, I would say the green portion here making up for 30 billions. That is also light infrastructure that we provide. In that bucket, I would also say that the maintenance deficit that we experience in all 3 countries, but definitely in Sweden, that would go into that green bucket. Naturally, also increased traffic, increased heavy traffic, I would say, in all 3 countries, as well as the higher demands that we all have for safety on the roads. Those, I would say, are the big drivers in what we do and what we take to the market. Well, being a unique, specialized company, 1 or 2 words about the competitive landscape. We have large competitors, of course, in all 3 countries, but few. I think what stands out with Terranor and needs to be underlined is that we are the only company that has chosen to be specialized in road operations and maintenance. The other companies you would usually see are also in perhaps house building or infrastructure. To us, road operations and maintenance is the only thing. That is what we have chosen to be specialized into. And to us, that gives us a great competitive advantage. And I will say a few words more on that, I guess, here on the next slide. Looking forward for Terranor, the strategy is to utilize the advantage of being specialized. Of course, the large clients looking forward will be state and municipalities. Working so close to state and municipality enables a good visibility because contracts are almost always at least 4 years. Sometimes they can be as long as 6 or 8 years. So transparent, high visibility, and of course goes without saying, working with state and municipality, credit risk, well, 0, I would say. So high visibility also in the cash generation. What we will do is that we will focus even more on tendering on the state and municipality contracts. That is the backbone, the core of the company. From there, we would, of course, utilize our position. Wherever we win state contracts, we will also move into municipality contracts, building strongholds. I would point out Gothenburg or the western part of Sweden as being a very good example of that, where we are both in the municipality and in the state contracts. So that is something that we are trying to do more of, and we're trying to do more of it in all 3 countries. When we are established in the state and the municipality contracts, we will also try and move in the value chain to also be, how should I put it, more of a one-stop shop service provider, being able to provide to all the needs from our largest customers. And largest customer is the state in the 3 countries. And of course, Sweden making up for 60%, so Trafikverket naturally being the big client for us. Looking at Trafikverket's needs in the coming years, or the coming decade, if you want, I think there is a strong demand for a company like Terranor to also being able to provide more services that goes towards handling the deficit, the maintenance deficit that the roads and everything that is surrounding to the roads needs to be lifted, to be supported in a much better way than it has been historically. So looking forward, that is what we are aiming to do. We will be on and close to the road, but more of a provider of everything that our clients need. Well, seasonality, I told some about it. I guided for the 3rd and 4th quarter, Inka, but please, if you would.
Yeah, so of course our operations, they follow the seasonality. We have 2 seasons, winter season and the summer season. Now we are in the summer season. We do more on the variable works, and the volume of the extra works is increasing towards in the summer season towards the year end. We are closing the extra works to the year end, and historically we can see the revenues increasing in the 4th quarter. The seasonality is important to keep in mind when we are evaluating our business performance on a quarterly basis. Looking at the growth here, our revenues have been expanded significantly, outpacing the market all the time. So the revenues has been reached 849 million SEK, increase of 12% on year. The growth has been driven successful tendering and new profitable contract, especially here in Sweden. Underlying earnings are improving. Adjusted EBITDA for the 2nd quarter was 17 million SEK, translating into the 2% margin, up to 1 percentage point versus last year. The main driver was the new profitable contracts coming into the effect. In 2nd quarter, 40% out of the adjustments were the IPO-related costs. On top of that, we had IPO bonuses, 35%, and internal process-related one-offs, 25%. We do know that the IPO-related one-off cost will affect also the third quarter as well, but this is just temporary. From fourth quarter onwards, the underlying earnings power will be more visible. Operating cash was negative in the quarter, minus 30 million SEK. This is including the IPO-related cost. However, the fundamentals are remaining strong. Terranor has track record of cash generative growth, with historically more than 20% annual revenue growth on low capital intensity. The cash flow will normalize as the one-offs will subsidize. Looking at the segments, Sweden remains the growth engine, delivering 507 million SEK in revenue with 2% of adjusted EBITDA margin. Finland generated 154 million SEK in revenue with a positive contribution from municipality contract. And Denmark delivered 188 million SEK in revenue with the profitability improving to 3% in adjusted EBITDA. All three countries contributed positively to the underlying profitability in second quarter. Our financial targets are unchanged. Revenue growth of at least 8% on annual average, adjusted EBITDA margin above 5%, a dividend payout ratio at least of 50% of net profit, and net debt to the EBITDA not exceeding 2.5.
Thank you.
Yeah.
And it's back to me to summarize. Well, why invest in Terranor? I would say that first and foremost, because we are providing a service to society that is very needed. It is critical. If we do not do our work good, society basically stops. Underlying, we know that there is a large demand for more investments into our sector. We will continue focusing on the operations and maintenance. That is the base contracts. But on top of that, we already now know that mainly due to political ambitions, there is a large portion of funding coming in the next decade to handle the maintenance deficit. I think we have proven to be able to continuous growth, but also continuous growth with underlying profitability increases. Looking at what has been the driver for the second quarter as well as the first quarter, I would say that the contracts that we have taken on, the base contracts that we have won towards the state, especially in Sweden, in the recent years, they show a totally different character in both profitability and our ability to deliver on the contracts, I would say. So the way that the company has progressed and the way we are able to provide both services, but also the entire tender process on what terms we win contracts now, it looks very much more favorable than it did in the early years of the company, when it perhaps was more important to gain market foothold and win contracts. So I think that is, like, to sum it up, the combination of working state and municipality, the big drivers into our market, and also Terranor's ability of being the only specialized company in only doing this. I think those are the big important things to take away.
And maybe some questions from me, maybe dig into a little bit of the details.
Sure.
Looking at sales, you had revenue growth, and both Q4 and also Q1 has been more meager in terms of actual growth, and now you see an acceleration.
Mm-hmm.
What was the driver behind that? What was the reason?
Should I?
Yes, you can.
Okay. Well, the short answer is the new contracts.
Mm-hmm.
So tender season last couple of years, actually tender season has been favorable for us in all times since we've been growing. What we see now is a shift where we also combine growth and profitability. So that is the short answer. We win more contracts, so we increase revenues. But to your question, one also has to factor in the seasonality. Since Q4 and Q1 are heavily dependent on weather situations, you would normally not see the increased revenue so clear and visible in those quarters. You would see it in starting in late Q2, picking up in Q3. Q4 will be the big kicker. Q1 is always the lowest quarter in revenues and profitability, and it goes to the weather situation because we are dependent. How much we snowplow, salt spread is dependent on weather. Come to the summer season, is more dependent on the maintenance work that is part of the base contracts, but also things that goes towards handling the deficit. So making the roads better, stronger, of course, fixing potholes, but also all of the things that I think everybody can imagine that when we built roads 60 years ago, the way we use those roads now are very different. So in the summer season, we also need to tend to all of those needs, making third and fourth quarter the highest in revenues.
And then you see, so part of this is extra works coming into play right now.
Yes, both. It is both things in the contracts that are on more variable prices, and it is the extra work, so sure.
So looking at Denmark, where you had some progression during the quarter, you won 4 new state contracts.
We did.
There were 5 of them that was up for grabs. You won 4. You also won a municipality contract. Tell us a little bit more about these contracts.
Well, to us, thank you, Marcus. Winning 4 out of 5 was actually the limit because there was a restriction that one contender can only win as maximum 4 contracts. So we were very favorable due to, I would say, a successful tender process. Maybe a word or few about the tender process, because being specialized, we have a lot of opportunities to track data throughout the 90 contracts that we are currently running, 90 somewhat. Of course, our tender process now is built on data to a much higher degree than it was in prior years. So I think that is also something that we see winning the 4 contracts in Denmark. It is the efforts from having the data and utilizing the data, but also, of course, how we can provide in the contract. So operations is also on a very high level now as the company progresses and being more able in doing what we do.
And looking at, because this is all public data once you won it, so looking at the databases, so it looks like the prices of the 4 contracts are actually up quite significantly. And from what I've seen, and there might be some missing there, but it looks like the 4 contracts that you won are actually larger than the 5 contracts that you had going into this.
You're absolutely right. Sorry, you were saying?
No, I'm just nodding.
Yeah, just nodding. Okay. No, you're absolutely right. The 5 contracts that we hold earlier, we took them 4 years ago. So we run them now for 4 years, and we re-won 4 of them, meaning, of course, that, there are some alterations, but I would say they are minor. More or less, we will be doing what we have done for the past 4 years, but we will, to your point, do it to prices that are much higher. We are talking 20% plus in average on all 4 contracts. So, of course, looking forward towards the Danish situation, we expect underlying profit to increase.
Yeah.
And also, I would say revenues are on the same level on those contracts. But then we are expanding in Denmark, looking into adjacent things. It could be road safety. It could be sweeping. That, of course, is a major part of our operations in Denmark. Denmark is more fragmented in the way that contracts are split up. In Sweden, we do more of everything inside the base contracts. So Denmark, in that sense, also has a better ability to move into adjacent parts of the market. So yes, I'm very proud. We are very proud of the way that the Danish operations have progressed.
And the new contracts come into effect as of January, right?
Yes,
Yeah,
true.
And maybe staying on the contracts, but changing regions. Looking at Sweden, where it is, you had a big deficit, and you also made the big jump into the number of contracts in the last tendering season, and they start now in September.
Yeah.
Should we expect the same kind of patterns from those kind of contracts that we now also saw in Denmark?
Yes. Clear answer, yes. And that is my expectation, our expectation. And I think the proof of it is looking at contracts that we won. Like I said, we've been favorable in winning contracts in Sweden. Late 24, contracts always start 1st of September. We are talking about the state contracts now. We started up 4 new state contracts 1st of September in 24. We have now almost run them a year. And if I may be so blunt to say, trick of the trade in our line of business when it comes to the state contract, of course, tender process, being able to get the right conditions in the contract. But then again, how you mobilize the contracts, how you start them, the first year, because the first year sets the pace, the standard, because you would continue doing the same thing for another 3 years after that. So looking at the 4 contracts, we started autumn, September 24, all are above expectations. So this year we won 5 new contracts that we will be starting up. We are in a good phase with the mobilization. So yes, we expect progress to be in the similar manner as for the contracts we started in 24, meaning that the operations and underlying profitability will increase, allowing us to reach the target of 5%.
But then also you had, because now you went from 18 to 23 contracts, you had a net gain as well, which has not always been the reason, the way it's been in the past, right? But where you kind of more have phased out projects which have not been as profitable. Is that the way to see it?
Yeah, that is also the character of the backlog continuously improving, where we leave contracts that were taken on, how should I put it, more challenging terms. Like I said, coming back again to the tender process where we know the net cost, we are very much closer to understanding what it takes to run the contracts. So yes, we are seeing a change in the backlog, moving us into more green territory, if you would.
Yeah. And when is the next tendering season? Because obviously there will be upcoming tendering seasons, and that will draw new announcements, hopefully, etc. So when is the next tendering season?
Well, looking at the state contracts in Sweden and Finland, it always starts in December. It ends late February, early March. So super intense period for us, of course. Tender calculations start, when the first tender season is done, we start looking at the next one, because the visibility, we know what contracts are coming out every year for the next 4 or 5 year period. So looking at the municipalities, you have a over the year spread. So municipalities, we work with tenders all over the season. State contracts, Sweden, Finland, in the window December to March. So yeah, it will be very exciting this year. Like I said, we've been fortunate enough to win contracts last year and the year before. Naturally, we have high ambitions. This is a growing company, and we feel we have a very strong offering to the clients.
And looking at profitability, I mean, we covered that, I think, but you had EBITDA growing in all segments. So both Sweden, Denmark, and Finland. And that was we were talking about extra works, we were talking about new contracts coming into effect. Is there anything else which you would like to mention in terms of the profitability drivers in the shorter term?
Well, we touched upon the character of the contracts being on more profitable terms. So that, of course, Secondly, I would say that the continuous improvements of the operations. I think we are seeing strong evidence that the specialization is good because we every quarter by quarter, we improve the operations. So I think it's the two of them, and on top, I would say the third one is the deficit, the backlog that needs to be invested. So for us being, well, hopefully the natural speaking partner to our large clients, tendering to their needs. So those three, better tendering, better operations, and also an inflow of more funds to the market, where naturally we should be the provider of those services.
I have a question from the audience. You have a dividend target of being above 50% of net profits. And the question is whether you would consider to do buybacks instead of dividends. Is that something that you've discussed?
It's always something that naturally would be on the table, and not ruling it out. Then again, we have communicated a dividend target, so that is what we will stick to. But we're not rule it out. I mean, it's ultimately up to the board to decide, but we have made a promise to the owners and the investors to adhere to the 50% dividend policy. So that would be my natural answer. Yeah.
And then finally, maybe, I mean, you were listed in June. There's been fast and tiresome process. It's been a lot of work with it. Now it's been summer. We go into the fall. Maybe a couple of words about what the falls look like, what the priorities, what is the focus for you guys during the fall?
Well, yes, it was an intense time, but in all honesty, it was an intense time for a part of the company. I mean, the majority of the company, if I were to say the part that really matters, they continue doing what they do on the roads towards the clients. So what is important looking at the fall, of course, mobilization of the new contracts, the state contracts, like I mentioned earlier, what you do the first year is very important. So that is something that we will monitor very closely. Of course, being on top of our game when it comes to the tender season in Sweden and Finland is also very critical. But I mean, this is what our operations is about. That is what all our colleagues have been focusing on, and they actually do focus on it every day. So yeah, it's business as usual. And we have high ambitions for this year.
And maybe finally, out of curiosity, we were talking about the tendering season. You had the tendering season starting late this year in Sweden and then going on in early winter. When do you start working with next year's tenders?
The minute we know if we have won or lost.
I mean, when do you start preparing for the tender?
Same answer.
Yeah,
same answer. Yeah, we have. I would say in general we have 5-6 months between we win the contracts and we start it. And in those months we need to set up shop. We need to find a location. We need to find employees, people to run the contract, unless it's in a place where we are already based. So that is what we do. We have a 5-6 months window to do that. And of course, you do not want to end up late, because in September contract starts, and in some of the contracts in the northern parts of Sweden, of course, winter comes soon. I mean, it starts snowing in October. Could be sooner. Who knows? We will see.
Mikael, Inka, we're running out of time, so thank you very much for coming here to talk to us.
Thank you, Marcus.
Thank you.
Thank you for listening.